All right, cool. I think we are almost full house here. Let's just start at 7:30. Good evening to all of you who've joined so late in the evening. I know you didn't want to miss this one. It's a special one for all of us who've been, trading with order flow, trading on Go charting, and specifically, trying to, get our uh, trading right, trying to learn new things about order flow and how to trade with it, right? So with any further delay, let's give another one maximum 1 minute, and then we'll start on the clock at 7:32. I think a lot of folks are joining in. But in the meantime, let me introduce you to Mike. Good morning, Mike.
Hey, good morning. Happy to be here. Excited.
Absolute pleasure. So those who don't know, some of you know who is Mike, and we've been, promoting Mike in our community. Some of you have went and checked his free course on order flow. I've got really great reviews, Mike, from my folks here from the Go Charting community. A lot of their doubts have been cleared. They love it. Your free course on order flow. So do check it out. At video, I'm going to post a link. I'll also promote the specific link where you can go and check his course out. Okay, but until then, if you've liked what he's doing so far, and if you know him, that's great. But let me give you a quick background on who is actually Michael Valtos. So he's been training since 1994 for banks like JP Morgan and Commerce Bank. He's also, as well as worked in commodity trading houses like Cargill and EDF Man, and for himself as well. He created orderflows.com to help traders understand and trade with order flow, because and that too in 2013, when order flow was almost unheard of outside the prop desks, outside the professional trading environments, right? So in 2013, at the age of 44, he left JP Morgan and decided to start trading for himself, and that's when he started orderflows.com, if I'm not wrong, Mike. He is here to actually pull the curtains away and demystify the world of order flow for all of you. I know when you approach a certain specific difficult topic like order flow, a lot of folks get demotivated to oh, it's too difficult, it's too hard, I don't understand it. Maybe today is the day where Michael will break it down into simpler chunks and help you understand, because once you get order flow, trust me, you cannot go back to using anything else. So having said that, I'm going to give control to Michael. Good morning, Michael. Thank you so much for joining us. It's a pleasure. Please, start off with a quick introduction about, what we be doing here, so everyone has an idea about, an expectation as to,
Yeah,
how's the webinar going to go on.
sure. Sounds good. Yeah, thanks for having me. I always love to talk about order flow, especially with traders from different parts of the world, and it's just fascinating because a lot of people don't realize that order flow is basically stripping down the basics of the market so that you understand the market, understand what's going on, between the buyers and the sellers, and sort of the forces that move the market, right? And it actually takes place in our everyday lives. We don't really think about it much. It's sort of second nature to us, but there's the financial markets, commodity markets, but anytime we go to a market, like just to buy you know everyday food or whatever, every time we're bargaining in a sense with with the seller, that's order flow, right? We always want to try and buy something for a little bit less than it's worth, or if we're selling something, try to get the most money for it. And order flow, once you start thinking in that sense, then the markets in general really start to make sense to people. And like you said, I encountered a lot of people, first time to order flow, they're nervous, they're hesitant, partly because they see numbers, right? And some people are just averse to seeing numbers for whatever reason. Maybe they don't like math, but they see numbers, they immediately think math. But really, all it is, it's just think of it as like measurements, if you will, of the buying and the selling taking place. How strong something is. Like you get on a scale to weigh yourself, right? If it's a big number, you're too heavy. If it's a light number, maybe you need to get your weight up. And that's once you start thinking of order flow in sort of everyday life situations, then it translates into the market very easily. And it's going to help you as a trader. I know it's helped myself, very early on, because trust me, I've gone down all those routes, back in the 1990s when I first got into trading. And you always think you found the holy grail to the market. It's like, oh, this is it. This tool is going to help me make $1 million in a week or something like that. And not that's such a there is that doesn't happen. But then once I started getting into understanding what's taking place in the market, sort of the underlying buying and selling, and how to read it if it's strong or weak, then my trading really took a turn. And like as you said, I've been trading on a professional level, in the banks and commodity trading firms for 2 decades. And that's really what moves the markets. It's not lines on a chart. It's not this moving average crosses this average. That's everyone's going to start buying, because in the reality, everybody looks at the market differently. And
Yeah.
we all don't look at a 1 minute chart or a 1 hour chart or a daily chart or a weekly chart. Everyone's looking at the market from their perspective, and it's how it's going to affect them if price moves. And with order flow, what you're doing is you're looking at how, in a sense, people are reacting to the market. And again, just putting it in an everyday sense, right? If you go to the store to buy something and you see a lot of people buying it, well, chances are prices eventually are going to start moving higher, because there's going to be less of that, in the store. And it's the same thing with the market, right? If you can see, and order flow allows you to see this, when a lot of people are coming into the market to get long, okay, then chances are prices are going to go higher. Or if you see a lot of people coming into the market and selling just to get rid of whatever for whatever reason, the reasons don't matter to us. It's more of the activity that's taking place is what matters to us. That's the order flow, that prices will go down. And we're going to delve into that when I get up the charts and sort of help you understand what to look for. And people always ask, well, what's the best way to approach the market? Is it order flow? Is it technical analysis? Is it fundamental analysis? Well, there's I'll be honest, there's no one right way. There's a right way for you, right? Trading is,
Yeah.
in my opinion, a very personal experience. And, you know, s- I've met a lot of traders that are, in my mind, very brilliant. They can see something happen in the news, a fundamental thing, and figure out what that effect is going to be on the market, 6 months from now. But that's a different type of trader, right? He's, more of a very long-term trader, and he's able to sort of connect those dots. More so than another person. So the way he trades, I can't trade that way, or someone else can't trade that way. And what I've developed over the years, is just by observing the market, is understanding, when these shifts in market sentiment is taking place on the short term, to take advantage of that right now. Okay, so there's no one right way or wrong way, and it bothers me. That's like a pet peeve of mine. I see people on social media say, "Oh, the way you trade is wrong." Well, if it works for somebody, I'm pragmatic. If something works for somebody, keep doing it until it stops working, right? I mean, who am I to say um, building
Yeah.
electric
Yeah.
cars to somebody 20 years ago is that's not how you make cars. Well, look at Elon Musk now, richest man in the world, because it works for him. He made it work for him, and so that's traditional technical analysis, but all that everything you see them trading in the market goes into the order flow. Okay. So
Mm.
with the order flow, you're sort of getting, in my opinion, the best of both worlds, right? You're getting sort of the
Yeah.
best of the technical analysis order flow and the best of fundamentals, right? So, it's sort of, think of it like a funnel. You got the left side technical analysis, right side fundamental. All their orders flow into the market and comes out as order flow. So it's nice in that sense. And again, order flow, the best part of it is it's what's happening right now in the market. All right. It's like taking your pulse. You know
Yeah.
how your health is by watching the order flow, as opposed to, using technical um, a technical tool, right, to analyze price from 50 bars ago. Okay, well, that was 50 bars ago. You're sort of bringing it forward to right now, like a moving average or something. It's probably sort of lost a bit of its effectiveness. And then when you get into fundamental analysis, you're really trying to project what's going to happen in the future. So you got one that's dealing with a lot of past data, and you got one that's sort of trying to extrapolate into the future. But order flow is what's happening right now. Who's buying, how strong they're buying, right? And this is, you know, later we'll talk about some of the ways people, I'll say, misuse order flow. But um, one of the ways a lot of people use order flow is looking for the areas of heavy volume, right? The heavy transactions. Oh, because everyone's trying to buy or everyone's trying to sell. But there's also with order flow, you can see those areas where you don't have heavy activity, you have very light activity. And that also means something, in the order flow. That's, knowing when people aren't interested to transact at, certain price levels is important information, right? We all, the obvious one is seeing where a lot of people are transacting. But, if price gets too high, then you're going to have less people transacting. Or if price gets too low, you're going to have less people. So, or even in the middle of moves, right? Determining momentum. But, I'll talk about that in a bit, as we progress through, today's session. So,
Yep.
you want to move on to sort of the order flow basics? Okay.
Yeah,
Can I
absolutely. I
share my
think,
screen here? Yeah.
yeah,
Let me see here if I can do this. Let me just make sure I got my chart up here. Mm. Okay, hopefully give it a second here. Hopefully you can see my screen. Oh, start. Whoops. Sorry. Yeah, there's a button that says start presenting. And of course I hit the one that says stop presenting. Um, just give me a second. Sorry
that's all
about
right.
that. It's one of those things you get excited and then you click the wrong button. It's like, oh no. Okay, so make sure I click the right button this time. Okay. Can you see my screen?
Yes, absolutely. Audio video is completely fine. It's good.
Okay. All right. All right. So hopefully, let me see here. You could sort of read the numbers here. So this is a footprint chart. This is the E-minis chart. Today is Memorial Day holiday, so a lot of the markets are closed, and
Yeah.
that's why today is a good day because um, it's good. I like to, over the weekends and, at night, I still go over the charts. It's not like, the trading day is over and that's it. It's a good time to sort of reflect and, sort of go over and sort of look for things that, you might not have noticed during the day because, during the trading day, we're so focused sometimes on looking for certain things develop that we might miss things in our trading. And, Friday was, a nice big up day here in the US. And so there was a lot of very good things to talk about. So getting into the basics of order flow. Okay, there's in my opinion, there's what I call the three building blocks of order flow, which is delta, point of control, and imbalance. Right, delta is the net difference between aggressive buyers and aggressive sellers. Now people say, why is there aggressive buyers, why is there aggressive sellers? Just buyers and sellers. Well, the markets trade in a two-way auction, right? There's a bid, someone trying to buy, paying a price, someone trying to sell. That's so you have a bid and an offer. And think of it again in everyday terms. If you are trying to, sell your house, okay, for, whatever, $1 million, and you think it's worth $1 million, so you list it for $1 million, and someone that's looking to buy a house for whatever reason, maybe they don't have a million, but they've got 800,000, and say, well, I'll bid 800,000. So you have a bid at 800,000, an offer at a million. So what you have there are a buyer and a seller, but nothing's going to transact because no one's gotten aggressive yet, right? The buyer hasn't agreed to the seller's price and the seller hasn't agreed to the buyer's price. So what you call those is passive buyer and a passive seller. And in the two-way auction here, let me just, right. So for example, at 4,200 right here, okay, you can see, price on the bid, price on the offer, but that's just the the
Right.
horizontal price. But in the two-way auction, it's actually, 41.99 and 3/4 at 42.00. Okay. And in our house example, the house is not going to get bought or get sold unless the seller moves down to the buyer's price, or
Yeah.
the buyer thinks, oh my
Moves up.
gosh, the housing market's crazy. I got no place to live. I got to pay a million. So he's got to come up with the extra money. And so he's got to be aggressive and go up and pay the offer price. So aggressive buyers buy from passive sellers, and
Mhm.
aggressive sellers sell to passive buyers. And that's important because when you're looking at the order flow, right, when you're starting to see, heavier volume at certain prices in a bar, that means something. Okay. So for example, what you have here on this bar right here, if you can see the volumes down here, right, the heaviest volume at a price level in this bar is actually right on the low on the bid side. So you have
Yeah.
this market sort of, working its way down, working its way down, it's trading, 400, 400, 200, 300, and 400. So on this move down, you're seeing the heavier volume is on the bid side, meaning there's a lot of people just passive. They're happy to buy sort of, you know, buy the dip. I hate to use that term, but they're just, well, yeah, if this market is coming down, I'm going to buy here, or I'm going to buy here, and they're basically absorbing. That's a term that you hear a lot of in order flow and in trading in general. Is when you have people that are willing to accept the aggressive sellers, and absorb that selling, because they think down here prices are you know inexpensive, so they're willing to buy it here, and eventually these sellers, these people that are selling aggressively into these bids, they're sort of running out of bullets, so to speak, right?
Yeah.
Because the aggressive sellers thinks the market is going down,
Yeah.
but while they're, you see, wow, 473, 463, 447, that's strong volume. Well, yeah, you have strong passive buyer there absorbing whatever they're selling. And once that selling is done, those guys have no more bullets. Well, who's going to move the market down? Well, not, you got more sellers. So, naturally the price should start to go up. And then as it starts going up, what you see often happening is these people that were selling it looking for the price to go down, well, the market's moving against them. They're eventually going to start having to cover. But generally what's happening is these guys that were selling on the way down, okay, and it's not like tens of thousands, it's just 473, 463, 447. The market is starting to react that, okay, we got this pushed down on some strong selling, but the market's not going any further, right? And so that's where the algos, the order flow traders start to realize, okay, we had that selling pressure, it's gone. Now they're going to start to get long, and then you add in the people that were selling originally down here to try to move it lower. They're starting to cover, and it's sort of like this snowball effect where you're getting more and more buyers coming into the market, and eventually what you get, right, is you get a market that is starting to eventually go higher and higher and higher. And that's what happened on Friday, right? We had that big rally up,
Yeah.
right? You see, it's just basically, on a footprint chart, it's bigger than a normal bar chart because you got numbers, but it just kept going up and up and up and up, for about another 30 points from this level. Now,
Yes.
the again, and that's getting back to, people see these numbers and they think that, oh my gosh, I got to analyze every single tick that goes through. And actually, you don't. That's the beauty of order flow is, there's different ways to read order flow. Now, this is the footprint chart, right? This is, in my opinion, the,
Best way.
the best way to analyze it, because you're not living and dying by every tick if you're watching the depth of markets, right? All the bids and offers, in the whole order book, orders going in, getting pulled, and, trying to make heads or tails of that, because what you see here actually traded. What you're seeing here is, when there's a trade, traders are committed to the markets, right? If people get short at some point, they're going to need to buy. They're going to need to cover their position. So, they're committed to being short, and that has an effect on the market. Whereas if you're just watching an order book, the depth of market, and see bids coming in below the bid, below the market or above the market, and, does it have a meaning? Yes, it does in a broad sense, but those orders get pulled all the time, right? If the market starts getting close, right? Imagine if this market starts ticking down and someone puts in an order to buy, 1,000 at 41.98, the next thing you know, it's trading 98 and a half, 98 and a quarter. And this person that's trying to buy 1,000, a lot of traders will say, hey, there's someone trying to buy 1,000. Maybe we should buy. But that big trader is sitting there thinking, hey, this market's coming down. Why should I buy it at 98 when I could buy it at 97? And he's going to pull his order. And next thing you know, if you got long seeing a big order come in at 41.98, thinking, oh,
Yeah.
the market, someone's there to stop the market, it's going to react and go higher. But the guy, so you get long at 98 and a quarter, and next thing you know, the guy pulls his big bid, and we're trading 97, 96 or something, and there you are, long 2 points. It's against you. It's not. It's one of those things where when it works, it's like, yeah, look at me, I had this great trade. But oftentimes you see that happen over and over and over in the market. And people that's you hear people about stories about people manipulating the market. That's one of the ways of, I don't even want to call that manipulation anymore, because the exchanges have really cracked down on that act of spoofing, putting in fake bids and fake offers. But big legitimate traders, they're thinking, well, really, why should I buy 98s? If this market is starting to sell off, I could buy 95s or even lower and then come in. But when you actually see a market trade a price and the volume that trades, that's it, right? That's official, as opposed to the orders going in and out of the order book. So you're not living and dying by orders coming in, getting pulled, in 2 seconds. What you see is what you see, right? That's the truth, right? And it's what you see right now in the market. And again, that's the freshness of order flow, as opposed to using a technical indicator, for whatever, MACD or something, with 2 and 14 period. That 14 period is pulling data from 14 bars ago, 13 bars ago, and putting it into your analysis now. Well, that's like, if you think about it on a daily basis, well, especially nowadays, the way the markets move so fast with, the governments doing all their shenanigans. What happened 2 weeks ago in the market doesn't really have much relevance here, because, the Fed makes changes like every day. Someone's always speaking, and there's new information coming into the market. That's why looking at the order flow is giving you, based off of what's happening right now in the market, in my opinion, that's the best. Now, I talked about passive buyers, passive sellers, aggressive buyers, and aggressive sellers. But let's take a second to talk about the different types of markets, or sorry, the different types of orders that come into the market. So a passive buyer and a passive seller work what's called limit orders, right? They're trying to buy at a specific price or sell at a specific price. That's a limit order. So, for example, if the market's trading 42.00, you want to buy it at 41.98, you put in, a limit bid to buy it at 41.98, meaning it has to trade there or trade through your price to get filled. Or, maybe you want to sell it at 42.02, so you put an offer in at 42.02. That's a limit order. So it has to trade 42.02 or trade through it for you to get filled. Now, with a limit order, sometimes you get filled, sometimes you don't, because it's a queue system. So if there's people in front of you and doesn't trade enough, to fill you, you can be, not filled on the order, as opposed to a market order, which is, what's called it's an aggressive order, right? Because someone is willing to cross that bid offer line, go from the bid, move it up to the offer, or move down from the offer to the bid. And that's an aggressive order. That's a market order. Now, there's other types. There's a stop order, okay, which what you do is you put in a stop either above or below the market. If you're trying to, like a buy stop would be above the market. So say you were short in a position, okay, say you were short at, 42.00, and, your take profits, down below 41.95, and your risk, your stop loss, your level that you're willing to risk, maybe that's 2 points. So you put in a buy stop at 42.02. So once it trades that price, your stop price, then the order becomes a market order, right? And it just fills it with impunity if it's a buy stop, it's just going to lift the next offer. And generally on most markets like E-minis, it'll just buy the next offers. Thinner markets, if there's other buy stops there, you might get filled, what's called slippage, ticker two, or sometimes even worse, at a higher price. And that is, a stop order. It is in a sense an aggressive order. Now people use it to, as a risk tool, right, in a sense to get out of a position, but people also use it to get into a position. I like to
Yes.
use stops to get into a position because it tells me the market is moving in that direction. So, as the market is moving up, 42.02, it triggers my stop, and it buys the next offer for me. Now, there's other types of orders that go through the market, like what's called a market sweep. Okay, and really what a market sweep is, people that want to get long or get short, they got a lot to do, they've got a big order.
Right.
Sweeps, we're not going to do sweeps, us retail traders, we're not going to do sweeps because our size just isn't that big. But if you're a big trader, at a bank or a hedge fund, and you've got 1,000 contracts to buy, you're going to affect the market, and you're going to look at the market, and you're going to see, okay, what's in the order book, and maybe you're trying to buy it around 42.00, but that my 1,000 lots is going to move the market, and you just want to get it done. You're not really price sensitive, and you're just going to buy every single offer if you're buying, or sell every single bid for the next point, or 3 or 4 or 5 ticks in the market, and it's going to turn the markets. It gives that push to the market, and that's the beauty of order flow, because you can see that information. If you're just looking at a normal bar chart, right, that's the difference between bar charts and candlesticks and say order flows. You can't see the volume, right? Because if I'm looking at this bar here, I see internally in this bar 0 contracts traded when it was 2.5 at 2 3/4, and the next level 3. So I can see that traders were aggressive in here. These are imbalances, these yellow boxes. So I can see traders were aggressive in buying this market up because there's nothing happening really in that two-way auction. Nobody, when the market was a quarter bid at a half, nobody sold anything in here. And
Right.
these markets move very quickly. There's a ton of orders coming in, like every nanosecond almost. So to see very thin volume of 0, or I mean, that's as thin as you can get at 0, but 3, even up here 1, I know this market has got momentum behind it. I know it's starting to move very fast. And when you start coupling it in with the other aspects of order flow, such as an imbalance, that this market is picking up a head of steam. It's chugging right along. And the last order type that I want to talk about is, it's an iceberg order. Okay, and we all know what an iceberg is, right? It's something that a normal iceberg that you see in the water, it's got a little tip pointing above it, but underneath the water, it's got a big mass. And an iceberg order is something where it's a limit order, but the trader is only showing a certain amount, right? So say the trader has an order to buy 1,000 contracts. He maybe shows 50 contracts, but he's still got 950 behind him. And even though it's a limit order and it's considered passive, in my opinion, that iceberg is actually an aggressive type of order, because this guy, the trader, has a lot to buy, but he's not showing it. So his activity is a bit aggressive. He's got a lot to do, but he's trying to hide it. And you often see it when you see it in a move, an aggressive, I say aggressive action, but an iceberg in a market that's moving up on the bid. And again, that's something that you'd have to sort of watch the market a little bit to start, understand the nuances of it. But say a market is going up, and let's see here if there's, sort of a good example. Yeah, where, what is this? Is Friday? Just go over here. So, this market is starting to go up, right? And, the market closed here at 5.25, right? And then it opens up, next bar, pretty much the same level. And then you're starting to see some, the heavy bids come in here without really moving the market down. So, if you're watching the market, if you're watching a footprint, you could sort of see it, because you're not seeing like a big order, when you're looking at your order entry, right? You're not seeing 1,000 contracts, you're seeing, 25 or 50, but then, it's trading. You see the footprint get bigger and bigger, the volume, but, it's still only showing 50 contracts or, 25 contracts on the bid. But imagine, right? If right, if you see a market going up and you see a big order, sitting there on the bid, that's being iceberg, that's only showing 50 contracts,
Mhm.
and it keeps getting refreshed. What do you think that means? Well, then that, hey, I know I've got support in the markets, right? And it's just going to give you extra confidence, in your trade. So, that's sort of the different types of orders that you're generally going to, see in the market, right? And obviously the two most common are limit orders and market orders, right? The passive buying, passive selling, and the market orders, the aggressive buying and the aggressive selling. And that's, again, people get all confused. Oh, there's 4 different types of buyers. What am I going to do? No, it's just, think of it in everyday sense, right? You go to buy a car or something, right? You're a passive buyer. If you're selling the car, you're a passive seller. If you just have to get it, I can't get to work if I don't have a car, then you're going to be aggressive, right? Or you're like, oh, my wife is filing for a divorce. I got no money. I got to sell my car. You're just going to sell it to whoever comes up to you with a decent, a decent bid. Say, yeah, I'll buy your car for 20,000. Okay, sold. I just want to get it out because I got to pay my lawyer bills or something. That's how it is in real life.
Yeah.
So, the tools, right, it's really simple nowadays. Go charting is great in the sense that it's got a great footprint. Like we were talking about earlier. When I left JP Morgan in 2013, the getting an order flow footprint chart was expensive. It was several $100s a month, and it was very prohibitive for retail traders now, and it was very limited on the software. Is, I won't say closed, but in the sense of who you can connect to, and who you can trade to in the markets. You had to get data from certain areas. But now, fast forward to what year are we? 2023. Now you got tools like Go Charting, right? Which is great because it's a web-based system. So you don't have to worry about a license on my laptop or or my office computer. You just log in, right? And it's all right there, and it's a very flexible system. I mean, they've already got a lot of tools on there, which I'll get to shortly, to help you with your analysis. Because even though there's a lot of software out there that has a footprint available, it's just the basic footprint, right? It's just showing you, the bid, the offer, the point of control, your delta. But Go Charting's got already additional tools, and it's those tools that it's going to help you in your analysis of the markets, right? Because at the end of the day, order flow, it's not an indicator, it's a tool to help you read what you're seeing in the market. And having a good tool is going to help you get the job done faster, whether you're building a house or whether you're trading, in the markets. Um, but yeah, so I mean, honestly, I said I've been doing order flow for, you know, as sort of, I started writing a book on order flow in 2013. That's how I sort of got into the order flow software business, is because the tools that were out there were just very basic. They
Right.
didn't really have anything to help a trader other than this is what traded on the bid, this is what traded on the offer. And, and I sort of, I knew about go charting, and then, I sort of connected with some of the guys there. And I was like looking at this, I'm like, actually this is pretty good. You guys have things on there that I would look at the chart. I'm like, okay, I could see how I could use that, right, in my own trading, in my own analysis. So it's, don't just think that having a footprint by itself is enough, right? Because you still got to learn how to read it. Right? It's, last night I spent some time in the hospital. I'd bring my son in, but you go to the hospital, right? You get an X-ray done, and I could look at the X-ray. I don't see anything. A doctor looks at the X-ray, and he can say, "Oh, this is what's wrong. This and this and this." That's because he's had the training on how to use it, on how to look at an X-ray, what to look for, and that's why I like doing presentations like this, is to sort of teach you, what to look for, how to use the tool that's available to you right in front of you to understand the markets. Okay, so let's sort of take a look at some of the more common strategies of order flow, right? I mean, that's really the beauty of order flow, is it really helps make the market you know understandable for a lot of traders. Okay, and again, sort of getting back to go charting, right? If you're familiar with it, right, that there's tools on here that you can use to understand the market a lot better. Okay, and let's just sort of talk about some of these tools. Let me get something to drink here. Okay, so when you click on a chart, right, you right click on the bar, you could pull up pull up the settings. And me, I'm more of a purist, right? I like to look at the volume on the bid, the volume on the offer. But there's different ways you could actually look at that. Okay, we talked about um, delta earlier. So again, there's no one right way to look at a chart, or no one wrong way. It's what's best for you. And like I say to people, trading is a little bit of a journey. It does take work, right? I mean, I love to. I wish there was a way I could just sort of sit down, turn my computer on, and money comes out of the drive or something like that. But in life, it takes work, right? And reading the order flow, trying to understand it, takes a bit of work on your part. Not like laboring or anything. You're not working in a coal mine or something like that. You're sitting in an office, so it's nice and enjoyable work. But you still got to sort of put the pieces together, right? And again, if you're looking at the order flow, it's just sometimes going to give you really great information. So normal footprint is the volume that's traded on the bid, the volume that's traded on the offer. One of the ways that sometimes I tell people that are struggling a bit with trying to understand what's happening on the bid and the offer, is to use a delta footprint. Okay,
Yeah.
and because what that's going to do is it's going to tell you if there were more aggressive buyers at a price level versus more aggressive sellers at a price level. I mean, honestly, if you've been around a footprint long enough, you can sort of do it mentally. But for newer traders, right, if you're looking at the delta, let me just put that on here. So it's going to show it on the left. Well, I had it on the left column, so it's showing on the left column. So if you see a positive delta, I'll adjust this side later, but on the left side of the bar, right, if it's positive, like plus four, like just 40, 39, it's telling you it had positive delta at this price, 42.01 and a quarter, 42.00,
Point
three
eight. Yeah.
quarters is 39. And then down at the bottom, you can see it's minus 141, minus 447. And so it's telling me there was, when you see a negative delta, in a bar, okay, at a price level. It's telling you there was
Aggressive.
aggressive sellers, but you're not looking at in the sense of, yeah, I got a minus 141 delta, so it's telling me, there was 141 more sellers than buyers. Then down here is minus 447. Okay, but you can see down here, this market didn't go any lower. So even though I got aggressive sellers of minus 447, you think that's a strong number, and and it is, but the market isn't going any lower. So I know that there was a strong bid here. Okay, this is that what I talk about when it takes that extra step of just analyzing price. You're seeing here, okay, at this price level, when the market was in that auction, um, there was just more selling into this bid here at 99, okay, 447, which is a strong number, and I can start to make that connection. Okay, I had 447 sellers here, but they were met with a buyer, and this market couldn't go any lower. Well, what does that mean? Well, it means that it's probably a strong buyer because you have strong selling that was absorbed by that strong bid in the market. Okay, and you can see in the green candle, right? Market started reversing, going higher. So I know that that volume is a strong volume. And again, every market, things are relative. Okay, if I see like here it's minus 49, minus 36, that's just normal order flow. When I see something big stand out, in this case, minus 447, that's telling me something important in the market. Okay, and again, it's markets exist not for traders to trade it in the sense of speculating in the market, trying to make money or lose money. Markets exist for people to transfer risk from one party to another, from from the farmer to the processor, right? The person that's going to take delivery of whatever commodity. That's why futures markets were created years, centuries ago, is this transfer risk from farmers to somebody else. It sort of guarantee their price. And so actually a lot of what you see in the market is just the market doing what it's supposed to do: facilitate trade, transfer risk. And really what we're looking for as an order flow trader is those areas where you have something interesting happening. Okay, I know that at this level I've got some strong buying coming in, so I know that that's a safe level that I could, one, hide behind if I want to get long, because I know there's some strong passive buyers. So if I were to get long here and I see the market come back to a level, well, okay, is that level, do I still see those buyers? Or if the market starts selling off, gets to that level, and I don't see the strong buyers anymore, then I know the market can have capacity to go lower. Okay, so that's one type of, one of the ways you could use a delta footprint. Now, again, I could go on and on. Today's presentation, if I wanted to, I could talk all day long, but I don't want to keep everybody here, for hours. But you can actually adjust all these things. It's all flexible, right? I know a lot of software, all they allow you to look at is just, the volume on the bid or the volume on the offer. But here you can see the buy trades percentage, the delta percentage. And so, for example, let's go take a look. I'll keep the delta on the left side, and I'll put delta percentage on the right side of the bar. So it's telling me at this price, 100% of the volume, the delta is, on this price, 28% is here. And, once you start going down the analysis form of, order flow, you're going to start to see things in a bar. And just, little spoiler alert, when you start to see, big numbers, 100%, that means something. Okay. Go look at charts, right? When you see 100% versus you see numbers like 9%, at the bottom of a bar. And it's, when I see thin volumes like this, 9%, sometimes that tells me the market is moving in a certain direction. But, that's a bit more advanced for traders. I don't want to overwhelm you with stuff yet, but, maybe on a future call, we can talk about things like that. And, another great tool that's like another great way of analysis, again, that's delta, right? The difference between aggressive buyers and aggressive sellers. Now, another thing that I've been using in my trading for a long time is point of controls. Okay, because point of control is the price level in the bar with the most volume, and oftentimes it acts as support or resistance, at least for the next bar. Because a lot of times you see a bar trade, um, you know, right to that level or sort of stop at a level right here. This is the point of control, this little yellow box. Okay, you can see the next bar doesn't go any higher. It's acting as resistance here. Here, it's acting as support. And there's different forms of analysis you can do with this. But one of the things that I've been using I use in my trading for years is they have it in here. What am I here? Extend volume point of control. Okay, it's what's called the virgin point of control. Um, yeah, I use the term abandoned. It's just one of those things. I think if my wife heard me talk about virgins, she might come and bang down the door. But so I use the term abandoned in the sense that you have a point of control
Yes.
that the next bar doesn't trade back into.
Yeah.
Okay, and when a market is moving quickly, oftentimes what you see is a bunch of the green bars with the abandoned point of controls when it's moving directionally, right? And I love trading around them, right? As the market starts going down, right? You can see here, right, the red candle with the abandoned point of control here, virgin point of control. You see it tests it here. You had one here, right? This green one, which sort of was holding a little bit. Now the market is sort of turning, right? You can see here, if I were to start to read the delta, I could sort of see a little bit of a shift taking place in here in terms of delta, right? Because market is sort of coming up to the swing high. You've got a smallish delta, -79 for the bar, right? Which is telling me that, one, it was nice positive. Now it's getting weaker, a little bit stronger, weaker, more stronger, weaker. So imagine you're coming up to a swing high, you got aggressive buying, that's what you want to see. Then you're seeing the delta, the aggressive buying in the bar. You just had some strong aggressive buying, and then you got a sort of a swing high here with negative delta, meaning sellers are in control of this bar. And then an even stronger negative delta. So here was -79. Then here we're looking at -300. Now I see this point of control. That's the next bar opens up, doesn't even come anywhere near to it, and it's got another strong delta. It could just give me a nice little quick trade to the downside here, right? And until I find the next abandoned or virgin point of control here, where it sort of comes in, and you can see how the market starts working its way back up. You got virgin point of control, right? And the market just keeps going up. It's just a simple thing, right? Just having a tool on your chart that shows you these areas, right? Then you start putting together the different pieces of, whether it's order flow analysis, right, with the delta getting stronger directionally, or maybe you're using delta analysis in the bar, or even just looking at the bid offer volumes in the bar, or even some sort of technical analysis, right? Maybe you had a Bollinger Band come in here, and this was the bottom area of the Bollinger Band that you would normally buy off of, and you're adding an extra piece of information of order flow to that. That's just going to give you that extra confirmation, right? Everyone always talks about you pick up any book on trading, right? You get to the risk management section, it's always about cut your losers short, let your winners run. Okay, well, that sounds good in theory, but how do you do it in reality, right? That's the part that they don't talk about. And with order flow, if you're reading the order flow, you're trading in that direction. So for example, right, our example here, right? So say I get short in here, okay, off of this virgin point of control, I get short somewhere around 42.05. Okay, and I start writing it down. Yeah, hey, it's going in my direction, 42.04, 42.03, 42.03 and a half. Then I start to see something bullish in the order flow. If my take profits at 42.02, we only get down to 2 3/4, then I start seeing bullish flow come in. Well, that's my sign to start looking at my exit strategy, because chances are we're not going to get to the take profit, right? And rather than say, you're stop, you're short at 42.05, you have to stop at 42.08. Most traders, well, I'll just let it come stop me out. Well, you don't have to, right? That's not cutting your losing trade short. When you're reading the order flow, it's going to allow you to say, hey, you know what? Conditions have changed. My reason for getting short is sort of wore off in a sense, or, in a sense gets invalidated,
Yeah.
by new information coming to the market. Because there's always information. We live in an information age where information comes fast and furious. And if you're seeing what other traders are doing, if I see, oh, other traders are starting to get long, this market's moving fast, that's going to allow me to cut the position much shorter than taking a full loss. Just as, letting your winners run longer, right? If I was, in a position, right, and I see, okay, yeah, I've got some bullish information in the order flow, well, I could let it go further, right? I don't have to just let it go to my take profit, because, if you start seeing overwhelming information, why would you sell at 42.10 when everybody's coming into the market buying? Maybe you could sell it at 42.12, 42.15. You could sell it higher and get more out of a trade. That's what order flow really allows you to do, right? That's in my case, or my opinion, the best use of order flow, right? Because think of it like a river, right? You have a current. Swimming with the current is much better than swimming against the current. And watching the order flow, you can see that, is my trade going in the direction of all the other trades? Because if you have an opinion of the market and nobody else has that opinion, well, after you get into a position, say you think, oh, I think this market's going up, but everybody else thinks the market's going down and they're all selling. Well, how's that market going to go up, right? It's not. But if you're thinking that, I think this market could go up, and you get long, it's what happens after you get into position. You have to monitor. So if you get long, then you start seeing other people getting long and more people getting long. Well, then that's how you let your position run. And if you're looking at a normal candlestick chart, right, just, the open, high, low, close, well, you can't see the intensity of that buying that's taking place. You can't see how strong it is or how weak it is, just as, up in here, just by watching the delta, right? I can see this market, sort of trading back and forth. Then it pops up here, makes this new high, watching the delta. Okay, we're at a sort of a new swing high here, but you got sellers coming in at a swing high. Okay, but that's just one bar. Then you start putting the pieces together. The next bar, stronger negative delta. So I got more selling coming in. Then even the next bar, more sellers coming in. So then the market starts dropping down a bit, right? So if you're long, this could be a sign that, hey, maybe things are changing. Maybe you should take some profits off the table. Okay. And then, you watch for new signs in the market to add back onto your position, get long again if need be, or, get short if need be. So, that's how you can use order flow to help manage your trade, because really that's what comes down to it, is trade management. People always talk about risk management, but in my opinion, it's more about trade management, managing your trade, right? We all have a set amount of, money we're willing to risk on a trade, but have you ever thought about, okay, well, how can I get more out of a trade? How, just again, everyday example, you're trying to sell your house. Well, you're going to fix it up. You're going to put a new coat of paint, do stuff like that, because that doing that is going to help you get a higher price. Just as if you're watching the order flow, you see that, oh, there's more buyers in the market, right? Or I can see there's momentum coming into the market, or, other things. So that's how you can use order flow to your advantage, right? Because at the end of the day, we trade the markets to make money, right? It's not a game in the sense that, oh, I want to be a winner or a loser. And fortunately, in the markets, that's how the score is kept, by how much money you make, or how much money you lose or don't make. So the longer you can ride a winning trade is better. So, and as well as cutting your loss. And again, to me, that's the important part for a lot of traders new to order flow, is sort of understanding the concepts of, how a market is changing, shifting in perception. And, as mentioned earlier, right, I made a course on order flow for, for go charting. It's free. And, take a look at it, and it's only a couple hours, 3 hours, but once you start to understand how a market is shifting, what to look for, it's going to really open up, pull back the curtain, and give you an insight into the market that is something that is just going to help you as a trader develop, go from maybe you're break even, or maybe you're losing a little bit of money, but once you understand what's happening in the market, that could be the thing that puts you over the edge to become profitable, or understand what's happening in the market, right? I've met a lot of traders that were just sort of struggling. Yeah, Mike, I could trade, but it just feels like, you know I, they're just sort of break even for years. And then, once they start looking at order flow, finding the parts of order flow that resonate with them, it puts them over the edge to become, successful, and not just successful, but consistent, right? To be able to, pull out good trades from the market on a daily basis is what you want to get at. So, um, it's just sort of lastly, I do want to get to you guys' questions. I'm always fascinated by people's questions, because I'm always, talking to new traders, and sometimes I come across a question that helps me understand the markets more. People are always like, Mike, you've been trading for 20 years, 30 years. What, why are you working with other traders? Is because, I'm a big believer in, helping other traders that want to become a trader, because nowadays it's very difficult to become a trader, right? In a sense, when I was getting started, we had trading floors, we had exchanges that you could go down and literally start at the bottom. Now, if you want to become a trader, trying to get a job at a trading firm is difficult, right? You got to have the right background, or the right degree, or something like that. It's very difficult. There's not a lot of spots. Whereas becoming a retail trader is easy, but if you don't know how to read the market, you're going to struggle. And I saw this. There's two quotes that I like to use. Each one teach one, right? That's why I like to work with other traders, because there's no point in other people struggling if I can help them. And this other quote that I came across recently was like, one day God is going to bless you with like a big house on a hill. Your job is that not just enjoy it, but help other people get to that point. And I've reached a very high point in my career where I don't have to worry about things in life. And if I could help other people get to that point, for me personally, that's the whole point of it. But one of the things that I just want to talk about really quick before we get into some questions is sort of one of the common misconceptions of order flow. Okay, and I touched on it a little bit earlier, is thinking that order flow is going to give you every single turning point in the market. All right, it doesn't, unfortunately. Nothing does. But the reason for that is because markets exist, like I said, to transfer risk from one party to another. So probably 90% of what you see is just normal trading activity taking place. But it's that other 10% of activity that you can see something happening in the market that's just going to give you, information that you can trade off of, right? Like I was talking about on this example with, the deltas, or even if I go back into the normal footprint here, change that back to, where's that? Sell volume, and then this one, I believe, was buy volume. Right, just here, right? Just I could sort of see things all come together. I could start putting together what's happening in this bar, where there's, some absorption taking place, because this market sort of went up and is pulling back to this level. Then I see this point of control. The next bar doesn't come back anywhere near it. This is where order flow is going to give me that edge over other traders that are not looking at the actual trading taking place. Like I said, a lot of times, what's happening here is just your normal trading taking place. But I can see the market came up, came back down here, and I can start to read what's happening in the order flow that is just crystal clear. I said, majority of the time, it's the market does what the market needs to do. facilitate trade, transfer risk from one party to another. But then there's sometimes where the market just sort of shows me its hand, so to speak, that everything just sort of makes sense right at this point. That help me, make that decision to take the trade to get long here. And that's the misconception, is don't come in thinking order flow is going to give you every single turn in the market, right? It gives you turning points or inflection points in the market at times that they happen. Okay, but not every turning point or every movement in the market can be explained, in my opinion, because the market's just got to do what it's got to do. It's got to facilitate trade. So just keep that in mind, okay? Because again, people, what do you see here in the order flow? Well, over here on this left-hand side, to me, this is just normal order flow going through. But it's when I get down here, that's where the interesting order flow comes in, and we can take advantage of it. So hey, you want to get to some questions, if you've seen any?
Yep. So Amit is asking, when are we getting your indicators, custom indicators on Go charting? Do we have a timeline for it? So
yeah, no, I'd love to get my indicators on there. Hopefully, after today, I can sit down and get them all worked out so that you guys can get them up on your Go charting platform sooner rather than later.
yeah, they are coming, but we don't know the timeline for it. I'll probably share some more info as soon as I have it with the community. But yeah, we will see his custom indicators coming onto Go charting. Okay. Please explain exhaustion level and how to identify limit orders more precisely. All right.
Okay, so there's two parts to that question. In exhaustion and so exhaustion and limit orders. Yeah, so okay, well, limit orders, that's the easy one. Exhaustion is going to take a little bit longer. The limit order, okay, is okay. So if you're looking at a footprint, right, like right here, the volume that trades here, these are limit orders that traded, okay, but what you have is a market order sold into that limit order. Okay, a limit order is basically anybody trying to buy at the current price, in the sense of the bid offer, right? Trying to buy the bid or sell at the current offer price. That is a limit order. An aggressive order sells into a limit order, or an aggressive buyer buys a limit order. Okay, and so the volumes, basically, in basic sense, volumes on the left-hand side of the bar, I like to have them on the left, is going to be your limit buys that traded. The volumes on the right-hand side are your limit sells that traded. Now, again, the limit sells are going to be traded against aggressive buys. The limit buys on the left-hand side are going to trade against aggressive sell orders, right? Market orders that came in. And exhaustion prints, or exhaustion in the market. So when I'm looking at exhaustion in the market, I need a move, right? There has to have been a move take place. So either a move up or a move down. Okay. And what I'll be looking for at the top of a move up is sort of lack of buying. Well, there's going to be aggressive buying, right? Because the market's moving up. But what I'm trying to focus on is the volume that traded sort of at the high of a move. Was it normal, or was it weak? Because think about it, right? A market is going to go up as people are buying, right? More, aggressive, but eventually you see that aggressiveness start to taper off, right? Sort of get weaker. So I could see just really quickly here, just by looking at this areas, right? The tops of these bars, right? I can see, 35 over here, 43 here. That's sort of your normal volumes. Okay. Then I see this market pull back a little bit here. Okay. 34 trades, right? And then 6 trades. Okay. So actually, this is a trade setup that I like. It's sort of this little double bottom with less volume the second time. So first time was 34, second time was 6. Okay. Well, I know I had some sellers here, sort of your normal selling taking place down here, 34. Because remember earlier, right, it was like 39 and up here was 34. So I got this little swing low, 34 traded, which is kind of normal. Then you come down and test that exact same price level the second time. It's only traded 6. So one, it's telling me as we come back to this level, this
Yes.
aggressive selling is weakened, right? It's only 6 contracts traded, right? Why isn't it sort of your normal, 20, 30, 40 contracts? Well, the sellers sort of coming down here because remember, right? I mean, people talk about games being played in the market, but you know, a seller's coming down here seeing if he can try to take it a little bit lower, right? To see if because people are watching the chart, right? Everyone's watching their normal bar chart saying, "Oh, we're coming down to test the low." Okay, but if you're looking at a footprint, you see 6 contracts trade. Again, if you're looking at a normal candlestick, right? Just imagine these candles, don't have the volumes there. You just see the market turn green. Okay, then it starts to trade higher. And if you're looking at a normal candlestick, you can say, "Oh yeah, we got a double bottom here." But looking at the order flow, as this develops, as this bar is still trading, you can see, okay, 34 and 6. So I know the sellers are sort of, they're trying to probe lower, or maybe the sellers are getting exhausted, selling up here. Because remember, we had been going higher, get a little bit of a pullback, and they're trying to sort of see if they can pull another trader. So the sellers at this point are exhausted, in my opinion, and I could see that developing in this bar in real time. So I don't need to wait for to sort of break this other high here or something to go. I could get long a lot sooner than later. So it's going to give you that extra sense because all I've got to do is, okay, well, I know I'm making that assumption based off of what I see in the order flow that, yeah, I've got exhaustive selling taking place here, right? I know people think that in the sense of exhaustion, it's like you run a marathon and you're exhausted, but what in this case, what you have is sort of the last seller has sold, okay? That move to the downside has been exhausted. And once that happens, once you know that those sellers have been exhausted, well, who's going to take the market lower? Nobody, right? Because you don't have sellers anymore, and you'd be looking for the market to go higher. And so all you got to do is, you place your stop. You can have even a tighter stop because you know that if you come back down here, you start trading more volume, then the sellers are back, right? And so if the sellers are back, you probably don't want to be in that trade anyway, rather than let it drop another 2 or 3 points to stop you out, right? So you could, getting back to sort of the trade management part, you could understand why you got to get out now. So that's hopefully that makes sense to you on exhaustion.
Yeah, absolutely. Okay, we'll take another few questions, 2 or 3 maximum. Okay, you mentioned, so BK asks, you mentioned one doesn't need to look at every candle for order flow. Any pointers when to look at them besides these levels? And can order flow analysis be helpful in scalping? So let's take the first one.
Yeah, what was the first part again? It was about candles.
So the question is basically, do we look at order flow all the time, or do we look at them at specific times, or other than obvious levels?
Yeah, no. Well, I like to look at it all the time.
Yeah,
It's again, depending on how you trade,
right.
it's I know guys that use order flow. They have levels, right, that they use calculate off a normal, either off of, let's say, a volume profile or even a normal bar chart, right? They look at they develop their own levels, and they just put them on, and they just wait. When the market comes to their level, they see what's happening in the order flow. So, for example, I know literally the first guy that I worked with mentoring on order flow that was the sort of the whole way he traded because he had his own levels, and we would just look at because what we started to find on his trading is he develops his own levels based off of his own pivot points or his own analysis, and when the order flow gets to that level, right, we're looking for things like exhaustion, or we're looking to see is there heavy volume at those levels, because that's going to give him the confidence to buy that level or sell that level or to ignore that level. For me personally, I trade the order flow in the sense of, I'm always watching a footprint chart. But again, if you have already developed, your trading style based off of, maybe you use Elliott wave, and um, you know, that it deals a lot with pullbacks and potential turning points. At you could watch a normal bar chart, a candlestick chart, and then when you start seeing it develop, then you could take a further look into the order flow to see what's happening. Is this the end of the wave three, or the end of wave five, things like that. So it's a tool that you can easily add into your existing way of trading. And for scalping, yeah, that's how I trade, right? I use order flow to scalp the markets.
Okay.
For me, that's been the most beneficial, because I'll be honest, in my younger days I was a bit of what the term was, aggressive trader, in a sense of I'd always not, if I'm looking at a bar chart, sometimes I would see, just based off a candle formation or something, that it's I think it should do this. And then when I started adding the order flow into it, then I say, oh, you know what, I shouldn't do that. But for me, again, I've pretty much probably looked at a bar chart daily for the last 15 years. So for me, I can't trade any other way, honestly. But yeah, for scalping, definitely that's how most traders use order flow.
What's your trading time frame then, while using Orderflow?
Well, holding trades could be anywhere from 1 second to probably about 5-10 minutes. I find that, because again, I trade on short time frames. I on e-minis. Some markets I use a 30-second chart and a minute chart, so I look at both. But I find that if I'm in a trade for 10 minutes and the market is just sort of it's right, or I'm in the money, or it's a small loser, sort of the longer I go into a trade, really the reason for being in the trade, I'm expecting the market to move sooner rather than later based off of what I'm seeing. I'm seeing a lot of aggressive buying. I expect the market to start moving. And me personally, people say, well, 10 minutes, that's not very long. Well, if I don't get that move that I'm looking for, okay, just, cut it, look for the next trade. Because the last thing you want to do as a trader is sort of get married to a trade and you miss the other good trade because you're like, nah, I'm in this position, and you're so busy focused on it, because at that point, after 10-15 minutes, you're like, come on, market move. But that you miss the good trade that's developing right in front of you, that's probably going in the opposite direction. But yeah, so I mean, again, it comes down to the type of trader that you are, like what sort of chart you're looking at. But it's not something that I would hold for hours on end, because really, when I trade, it's only for 2-hour periods. I don't do these marathons of trading for sitting in front of the screen trading for 5-6 hours at a time. That sort of goes against your mind, what it can, as I get older. Maybe I'm just getting old, but I'm not as young as I used to be, in that sense of being able to sit and trade consistently for 5 hours straight.
Yeah, not a lot of folks talk about mental capital, which nobody tracks essentially.
Yeah.
And daily trading. If you want to be a day trader, you've got to be careful about how much time you spend in the casino.
Right.
Yeah, I agree. Cool. Maybe quick 2 questions before we let Mike go. Right.
Okay.
All right. Okay, let's talk about more about your custom indicators. How do uh, BK is asking, do you have any specific scanners which can help identify reversals, aggressive movement? Maybe you talk a little bit more about your custom suite of tools, Orderflow tools, and the major features, the three main features. How do these indicators help retail traders like me get help me trade better?
Yeah, sure. So again, my order flows suite, which we're going to work on getting put on Go charting. It's your existing footprint chart like this, and I've currently got about I think there's like 17 different tools on there that help you analyze the order flow. Now, people think, well, hey, 17 different tools, but you don't use them all at once, right? You find the pieces that work, that you could understand, that help you understand the market better. And again, there's many different markets out there. There's about 40 markets that you can trade, at least in the US. There's obviously E-minis, right? You got NASDAQ, you got Russell, you got the currencies, right? The euro currency, Jap yen, Swiss franc. Each one sort of has its own little idiosyncrasies. And, some markets trade a lot more volume, some trade less. And there's tools that, you'd probably want to use on markets that trade thinner volume, or tools that you could use on markets that trade heavier volume, your normal volume, right? Like CME is sort of like the benchmark for trading in terms of volume. But once you start getting into some of the smaller contracts, like say, Swiss franc, it's got much thinner volume, so it's going to be a little bit harder to analyze the volume because there's just not as much volume. And so there's sort of different tools, but like for example, right, what's available right now on Go charting, right? Things like that, the virgin point of control, right? I haven't even talked about the unfinished auction, but that's a tool that helps you. It's a tool to help. Basically, it looks at the tops and the bottoms of the bars and looks for the areas where the volume, right, on the bid and the offer. You have what's called an unfinished auction, right? Because normally at the bottom of a bar, you should have 0 on a green candle, right? You should have 0 on the offer side, and at the top of a red candle, you should have 0 up here. So if you got volume on both sides, that's what they consider an unfinished auction. And actually, the people that developed the concept of unfinished auction back in the early 2000s, I've talked to some of them about this. They've actually reached out to me. Surprisingly, they say, well, when they came up with the concept of it, the markets traded much differently back in the 2000s. S&Ps were a lot lower. The E-minis back then, were trading 1,000. Now we're at 4,000. So you wouldn't get the big swings in the market. And they'd look at unfinished auctions where they'd be looking for the market to come back to. It's a level the market could come back to. So if you got an unfinished auction, they'd be looking for the market to sort of come back in and fill it, right? The sort of poor order flow. But markets have changed, and there's different ways now people are using unfinished auction, which maybe in a later class we can talk about it. But tools like that, right, is sort of the tools that we've developed on Orderflow's Trader. Now I have tools like what I call sequencing, which is a market that's moving, that's taking out subsequent. If say it's moving up, right, it's taking out subsequent high, heavier offers on the way up. Because and why is that important? Is because imagine you're you're digging for gold, so to speak, right? You start digging a little bit, the dirt on the top is the easiest part, right? Then you get a little deeper, it gets, it's clay, a little deeper, it's rock, then you get the gold. And if you're looking at the volumes, right, as the market is going up, right, 43, that's nothing, 52, then 253, 348, it's getting through subsequently higher volumes on the offer side. That is going to it's telling you this market has got no problem eating through these levels, right? So when you start seeing things like that, then things like the exhaustion prints, right, which we're talking about here, right, highlighting these areas, drawing zones out from, it's things to help you understand sooner, because in my opinion, the brain processes images much faster than trying to read the numbers. Because if you're sitting here trying to read okay, I got 34 here, I got 6 here. Well, if there's a way for me to highlight what was happening in the order flow at the bottom of this bar, telling me, hey, you got exhaustion here, then it's just going to help me react much faster. Because sometimes you might be looking at this, trying to figure it out, and you might miss until the market gets starts moving away. Oh, I had that exhaustion print here. That's where having the tools in a software suite is going to help you see, yeah, well, you got exhaustion forming right here. The way I described it, years ago is something to slap me upside the head, say, hey, Mike, pay attention to what's happening here in the market. All right. Because again, markets are moving quickly. And if the market's moving quickly, sometimes you get excited and you sort of miss these things, right? Like something as simple as, oh yeah, you know what, I got that virgin point of control here. Right. That to me, that's important information. Okay, I got a virgin point of control. I've got the exhaustion print here. Okay, I can start seeing that. Hey, I'm starting to see some nice bullish order flow come into the market, at this double bottom, right? So it's going to help me as a trader, start to move, in that direction that should be in, going with the flow of the market. And again, there's about, on the current version uh, of the Orderflow Trader, I think there's 16 or 17 things that we have on there that, just sort of is going to help you as a trader understand what you're seeing in the market. And, I say go charting, they've got a few features on here that, when I started using it, I'm like, hey, this is pretty useful too. um, that I haven't even, considered in a sense, but, so I think, once we get on, the Orderflow software suite, the Orderflow's Trader onto the Go charting platform, this is going to, I think, in my opinion, should just blow you away. And, I'm excited to get, working on that and get something out to you guys, quickly. So, okay.
Yeah, it's truly yeah, incredible to even every day Autoflow teaches me something or the other. Maybe a good way for people who are here and are thinking, okay, you understood something about Autoflow and maybe you want to dig deeper into it. Mike, could you quickly show us how to get your Autoflow course, which Mike has, thank you for building such a value pack course for our global community. Maybe if you could, quickly send us, show us the link on your browser as to
Yeah,
how to
sure.
sign up to your course.
Yeah, give me a second here.
Yeah,
Is
sure.
there like a chat box on this? Let me see here. I got this here.
I,
I'm trying to find
I
where's
do have the link, so maybe I'll share it with the.
yeah, if you can. Here's
I do have the link. Wait.
okay. I'll put it there. Well, I put it in the chat. I think hopefully everyone can see it. There's actually there's a link. It's kind of a long link. I should probably shorten it. But I
This is
put
the.
it in the chat there for everybody to see if you guys can see it there.
I'll also share this link to everyone in your Telegram, Discord, Twitter, wherever our
Yeah,
community.
you guys put it on your website. Yeah,
Absolutely.
yeah. But yeah, no, that's a great way to get started with Orderflow. And I'll share just another link with you guys really quick.
Okay.
Let me just type it in here. This is book that I wrote on Orderflow
Yes.
years ago.
Yeah.
It's it was sort of going to be my contribution back to the trading community. Because I left JP Morgan, and my daughter was born around that time, and I was sort of bored with stuff. So I said, I want to give back to the community, and I started writing this book, and that was supposed to be it, the end of it. But then, I'm like sitting here, I'm like, why can't this information on the order flow footprint chart be made? Because computers are designed, to help us, right, to do things for us, and so I'm like, what if there's a way to highlight certain things in the order flow on the footprint chart? Should be easy. And I was fortunate to meet a programmer that understood order flow, and we
Right.
sat down and that's how we developed it. And that's why it's nice to see things like go charting, because I like to think that people are moving forward, right? I mean, because you see a lot of people, they come up with a footprint chart, right? And I said, when I started my footprint chart in 2015, well, we started it in 2014, but and I was using it, and people are like, hey, Mike, can I get it? I'm like, well, I developed it just sort of for myself. Then people wanted to buy it, and so on. That's how I ended up getting into that side of the business. But it's like I said, I see a lot of software like, hey, we have a footprint chart, but then that's it, right? They don't take the analysis a step further,
Yeah.
and and help the trader understand what it is that they're actually analyzing, right? Because at the end of the day, software is developed to help you, right? So
Right.
and I like seeing people develop new tools, and like I said, I've seen a few things on Go charting that is I haven't even thought of. So that's why I've been excited to work with the guys there, because they're also hungry in that sense, as opposed to, oh, we have the software because everybody else has the software, so we're trying to get into it. But they're also developing tools for traders, which is good. So I put a link in there. That's the where you could go to download the book. You just got to enter your email or whatever. Then it'll take you to the digital download. It's about 150 pages or so. So
Yeah, it's a class.
okay.
Okay. Well, Mike, my deepest gratitude for being a guest on our podcast, this webinar. Your insights and expertise as a trader. I hope it's made a significant impact on our audience, and we are incredibly grateful, to have you, to have your contribution, global community we have. Excited to have your tools on a platform, and even more excited to have you have your expertise in our global community. I mean, welcome to Go Charting, man. Thank you for this value-packed session. I'm sure our audience has a lot of questions now. Um,
Yeah,
I'll
no,
try my
it's great. I said we should try to do this again
yeah, for
in the
sure.
future. So again, it's like I said, it's one of those things because people, to be honest, one of the reasons why I like working with other traders because trading is unfortunately kind of a lonely business in the sense that you're in your office, in your room or something, and you're trading. You don't necessarily have that contact with other traders, but when people start asking questions. And sometimes for me to explain the answer, I got to sort of look at things a little bit differently. And sometimes, when I just sort of turn the chart, so to speak, like a different angle, then I start to see other things that, maybe I'd never thought of before. So it actually helps. It benefits me too. So,
Yes.
that's why I enjoy doing it.
Awesome, awesome. All right. A few questions have been unanswered, and I'll take them after this call to all the members. And then maybe, if time permits again, and if Mike can do this again, maybe in a week or 2 weeks' time, maybe we can have him and cover something very specific on our next session. Let's see. Will people are really okay? They're going to wait forever if we go on. But I
Yeah.
know, let's do one thing. Maybe you guys should go through his course first. All right. No, dig
Yeah.
deep, try to learn. There is no replacement for repetition, in my opinion. You have to go in the markets, go through, trying to understand try to apply what he teaches in the courses in live markets. Because honestly, your brain is a pattern recognition system, and as long as all of these tools will help you, but you have to put your effort into the market. The more live market repetitions you put in, the more you understand about order flow, and these numbers won't be I guess too much of a difficulty for you then. They'll not be intimidating in a sense. Let's see. Thanks,
Yep.
Mike, once.
Yep. No, thanks for having me.
Yeah, you have a good day, man.
All right, man. You too. Thanks. Bye, everyone.
A lot of members are saying thank you, Mike. Thank you for making Order Flow so simple. Amazing session. Lots of gratitude, love from India to you.
Excellent. Thanks, guys. My pleasure.